Hey, Aisha, it's great to be with you today to talk a little bit about what's going on in the semiconductor industry. It's a really fascinating part of the market and the economy, especially since so much is driven by technology. So let's kick things off and just start to digest what's been going on out there and analyze what might be to come.
Hey, Mayhem. Thank you for taking the time to do this. I mean, I've heard you talk about the chip makers, and in our discussion, you've always been very articulate about how they are similar and how they're different. So today, I thought we could have a discussion for everyone's benefit on the three major companies, Intel, Nvidia, and AMD, and some of your views on them. What are you seeing in terms of opportunities, in terms of growth? So let's start with a background and an overview of the three companies.
Sure, absolutely. So, semis are an interesting industry because they really have a lot of different places where they go. Sometimes they're going to manufacturers to be integrated into products. Sometimes they're going directly to the government or to businesses to either be, you know, put into a larger system or to be integrated into a larger product, but other times they're going directly to consumers. For example, when people build their own computer, they might buy a CPU or they might buy a GPU in the form of a graphics card. So semiconductors kind of influence everything. Sometimes the products being sold by these companies are in something as simple as a laptop or a phone. Other times they're in something as complicated as an aircraft carrier or a satellite or a major system that influences our everyday lives. And so what's so interesting about that is that the advancement of this technology has a really big impact on society and on how other technologies might manifest. That is to say, the more computing power we have, the more we can potentially do with technology. So with that in mind, semis are differentiated in the sense that they have those different places where they go. Sometimes you have, for example, like Nvidia, they sell their graphics cards through what are called original equipment manufacturers. Those are companies like EVGA or Asus or Gigabyte, where they actually do the heavy lifting. NVIDIA tells them this is how you design it. They supply some of the parts, and the company has to put it all together. They have to market it and they have to distribute it. And, for the task of doing that, they get a small margin and they get to carry a major label like NVIDIA. AMD does the same. They have their graphics cards primarily resold through third party vendors, these OEMs or original equipment manufacturers. But AMD directly distributes their CPUs. That is to say, they manufacture their own CPUs. They wind up in the hands of consumers, in businesses, in integrators. So, for example, your Dells, your HPs, those types of companies, but also right to data center integrators, right to consumers who are buying CPUs to build their own rigs, and so on and so forth. And then Intel is much more of a company that sells what they build. Pretty much everything Intel has, they're doing most of the heavy lifting on for their core products, right? So their CPUs, their solid state drives, and their upcoming graphics card lines are all carrying the Intel banner. They're being directly manufactured, distributed through Intel's network. So that's where they're a little bit differentiated, I guess you could say. Intel and AMD are primarily focused on selling processors. So those are these CPUs, and I'm just going to put a slide on screen to kind of talk about the difference between CPUs and GPUs. CPUs are what go inside our computer, and they're sort of the generalist part of the computer. They're doing more of the operational heavy lifting, whereas GPUs are actually very, very fast processors, but they're only for very specific operations that are data intensive and done on a massive parallel scale. So CPUs are built to kind of run the entire system. They do a little bit of everything. GPUs are very specialized for more complex data heavy operations. And so we can kind of see that when we're looking at NVIDIA, that's their bread and butter. They are a GPU centric company. They sell graphics cards to consumers. They sell, at least for a while, to the crypto industry, and they sell to data centers and integrators as well. And they have that sort of OEM distribution channel. So it's interesting to look at all these different companies because each of them are different. Intel is kind of like a pure play on Intel, for better or for worse. If the industry is very slow, their own inventory accrues. AMD is kind of a little bit of both. They've got the CPU side, but they also have the GPU side where the vendors, the OEMs, are taking greater risk on that. And then you have Nvidia, which is kind of like a pure play on OEM. They do have some hardware they sell directly, but a lot of the stuff they do is OEM. And the market share breakdowns on these are pretty interesting. Nvidia has 75% of accelerated graphics processor unit market share. So they're a discrete graphics card maker. What that means is that Intel, if you look at graphics globally, they're the leader, but that's because most graphics are happening at a very simplistic level on the CPU, what's called an integrated graphics processor. But if you need more complex graphics and you need them at a reasonably fast speed, you need acceleration. You need a dedicated graphics processor unit. And that's exactly what NVIDIA is making. It's also what AMD is making in their Radeon series of video cards after they bought the ATI graphics card company over a decade ago. And so AMD has about 24% of that same market share in what are called discrete graphics cards. So AMD is growing that market share. Over time, AMD has actually been eroding NVIDIA's market share. And we'll get to that in a little bit on a later slide. But suffice it to say, AMD is scrappy because not only are they eating into NVIDIA's GPU market share, but they're also eating into Intel's CPU market share. So they're kind of taking a little from both worlds to build their own durability, to build their own, you could say, more of a competitive advantage because they usually come in lower on the cost side and still compete pretty well on the performance side. And then on the last part of this, Intel is really a leader in data centers and the cloud and really desktop market share as well. Intel has 75% of the CPU market. AMD is not too far below that remaining margin. They're just about 26% of that market. So AMD is continuing to grow there. And really over the last 10 years, they've grown in leaps and bounds, and they're giving Intel a run for their money more and more as time has gone on. But Intel still has a pretty solid lead in the data center and cloud space, which is helpful for them because it helps to dull some of the blow from slowing PC sales.
Thank you. That was a great start. Um, so we'll get to distribution. I know you spoke a little bit about the distribution already, and we'll get to more details about that in a little bit. But I think before we move on to how the distribution takes place, let's talk a little bit about sourcing. Now, we've experienced a chip shortage, and there's a lot of discussion around how these chips are being made. So, if you could, please walk us through the sourcing situation for these companies.
Sure, absolutely. So AMD and Nvidia source a fair amount of their chip fabrication from Taiwan Semiconductor. Um, and so we do know that there is some vulnerability there because if anything happens, whereas China's invading Taiwan, it could be that operations for Taiwan Semi are disrupted. So it's a real risk that we face moving forward for these companies because they're externally reliant. It's interesting because AMD used to actually, Global Foundries used to be a part of AMD, and they spun them off to a separate company and then pivoted over, to use a tired term, to Taiwan Semi to really kind of up their manufacturing sophistication to smaller and smaller scale. And what that means is you can put more and more transistors, and each transistor generates less and less heat as you go to smaller sizes of manufacturing. So that's one of the reasons they switched over to Taiwan Semi, is they have more, I guess you could call it a superior manufacturing process. It's similar to why Nvidia uses them for their graphics cards, because if the more transistors you can cram on a chip, the better performance, the lower the power usage, the lower the heat. It's just a win-win-win-win. And Intel, on the other hand, does their own fabrication for the most part. It's actually one of the reasons they're a bit behind in terms of their technology. They probably are set to catch up as they're going to be investing tens of billions of dollars in new fabrication in the US. As a part of that CHIPS Act, they'll have some financial incentives to do that. But ultimately, Intel is a little bit more isolated from some of this geopolitical risk because of their reliance more on their own foundries than these external foundries like Taiwan Semi for AMD and Nvidia.
Great. So let me throw you a curveball here. We know Taiwan Semi is reporting tomorrow. What do you see in store for their earnings?
Oh my, quite a curveball indeed. I would say, for one, a lot has been discounted out of this stock. This thing has pretty much given back its entire post-COVID crash run. It's certainly pricing in some significant risk here. It's kind of pulling back to something that may be an area of support. So we'll have to see what happens there. But in terms of the company itself, I would say they're going to guide pretty poorly because look at what just happened with Samsung. And I'm not saying Samsung and Taiwan Semi are directly comparable, but they're similar. And they do have similar inputs and outputs. And so if you're looking at consumer electronics slowing across the board, the PC sales cycle is down almost 20%, the lowest growth that it's seen, or the steepest decline, I should say, it's seen in 2 decades. So that's a big deal. Mobile phone sales are falling over 10% year over year. Tablet sales are likely to decline in this environment. Just all over the place, people are extending their refresh cycles. They don't need to buy a new device. They used to do it because it was nice and shiny and new. But in times that are more tight in terms of inflation and so forth, you definitely have less uptake of these products. The refresh cycle for most consumers is increasing. And so I would say that at the end of the day, it's something to be considered of for Taiwan Semi's earnings because they're going to key off this. They're going to probably talk about the macro headwinds. They're probably going to talk a little bit about how Nvidia is placing less orders, AMD is placing less orders. Those are major customers. We've already seen what's happened to their stocks, and their earnings forecasts have been, significantly guided lower. AMD just came out recently and basically dropped a bombshell on the market, and it wasn't received too well. The stock was down almost 14% on the day. So I think Taiwan Semi, some of the risk is kind of being priced in here, but I think they still have more downside. They could retrace this entire move from the COVID crash. And I would say that they're going to be talking about what is probably going to be a very difficult operating environment, not just for the next quarter, but probably at least a year or two to come. And that has not been priced in.
Perfect. Okay, so now let's turn our attention back to distribution and sales, basically. So, how do these companies actually sell their products, and what should we be concerned about when it comes to distribution?
Sure, that's a great question. And I think distribution is so differentiated between Intel and Nvidia. That's the biggest contrast here because Intel is all about their own product. They're making their own product. They're selling that product directly to resellers and vendors. And that distribution model leaves the burden of inventory largely in the hands of Intel. I mean, obviously, they're pushing volume of this product. So vendors and resellers are taking some of that risk on. But NVIDIA is a lot different because NVIDIA, the majority of their products are going into the hands of OEMs, right? So NVIDIA is selling them like a chip and some specialized design plans and some giving them marketing materials and basically saying, good luck, and you can keep the markup, but you're competing with a whole ecosystem of different integrators. And they are taking on the distribution risk, that inventory risk, right? Because they have to discern what the market forces are, how many cards they should make, how many they should have kind of in the pipeline that are being made based on what they're seeing from prior order flows. And we had this very interesting cycle happen. And I know we'll be getting into crypto in just a little bit, but this plays into the distribution component because as crypto was surging, mining capacity was growing, demand was growing. And because of the way these cards are sold, it's very difficult for vendors and OEMs and even the companies themselves to understand which segment of revenue is just pure crypto and which segment of revenue is people buying better computers and upgrading their graphics cards and building high-end gaming systems. And so this became an issue because a lot of these components of the ecosystem for all three companies, but particularly AMD and Nvidia on their OEM side, had a lot of trouble discerning how much they should be making. And so EVGA, which is one of Nvidia's key North American distributors, actually bowed out recently. They said, look, after we sell all the cards we have in our inventory, we're done. And it's speculated that it was because they didn't have enough margin, competition was too thick, and the overhang from crypto left them with too many video cards to move. And so this company, which made something like 80 to 90% of their revenue from video cards, because margins were so low, they're willing to walk away after they clear their inventory. So I'd say the distribution model here is really interesting. AMD is kind of in the middle. Their video cards are largely made by original equipment manufacturers. Their CPUs are manufactured by themselves. And so they have kind of exposure on both sides of the ledger, but they're more of a CPU than GPU company. So I'd say ultimately Nvidia, the nice thing about them is they're pushing off a lot of that risk onto their distributors. But the bad thing about that is it creates unpredictable glut in the market that can have a big impact on their margins if you have to do fire sales. And Intel, on the other hand, probably has a better pulse as to everything that's going on with their products, but they're taking more of the inventory risk. And then AMD just kind of sits in the middle.
Okay, great. So you talked a little bit about crypto, but before moving on to crypto, let's talk about the cloud and data center.
Sure.
For someone
Absolutely.
like me, um, sorry, for someone like me who knows very little about this kind of technology, would you just break this down for us? I mean, how do these chip makers actually fit in when it comes to the cloud and data centers?
Yeah, I think that's a really good question because we're looking at changes in how data is processed. We're looking at changes in how much data we process, and we're looking at ever increasing complexity and the requirements for processing that data in shorter and shorter intervals of time. And so on screen, we've got that CPU versus GPU chart. And why this is important is if you are a large cloud distributor, like you're an Amazon or you're a Microsoft or even a Google, and you have a large presence in the cloud, you have to cater your hardware to whatever it is that your customers are demanding. And a lot more customers are demanding GPU acceleration for their workloads because they have very large amounts of data that needs to be computed more rapidly and, quite frankly, at a better cost. And for the cloud, most of the cost comes down to space and power, and GPUs are better in both of those senses for the kinds of data intensive, mathematically complex operations that they do. So we're going to take a look at why. The first reason is because CPU peak performance is already here. So CPUs were designed for a very wide range of tasks. We can think of them, as I was saying before, as more sort of generalist. A lot of data center computing uses CPUs from Intel. AMD is starting to grow more in the space. So Intel supplies 70% of data center CPUs, AMD 22%, and that market share is growing. In fact, AMD's data center market share more than doubled between late 2020 and mid 2022. Now, you can see on screen this idea of Moore's Law. Moore's Law was basically that CPUs could continue to get faster and faster as we cram more and more transistors on a chip, and they would double in speed at a reliable frequency. That is no longer true. So Moore's Law is effectively dead, which means that CPUs are no longer as exciting for the data processing space, not only because the rate of innovation has stalled in terms of processing power, but also because there's a more attractive alternative. So on screen, we have GPUs. This is where innovation is really happening, and they're outperforming CPUs significantly with the expectation that they will be outperforming CPUs with a increase of performance of 1,000-fold in 10 years. Whereas CPUs have reached this sort of plateau rate where they're only increasing performance by about 10% a year. So this is a major, major departure, and GPUs still have a lot more potential. So within the cloud, we know that a lot of the components are specialized to certain data loads, certain workloads. GPUs have been kind of fit into that. They're sort of a cog in the gear of intensive data processing. And they were originally designed to render 3D video. So they were doing complex mathematical operations that had to be done in parallel in real time. Like if you're playing a video game and you turn around, you need to see the whole world rendered for you as you're turning around for it to be realistic and not be jarring and induce motion sickness. So video cards had to be very, very fast. And those mathematical operations involved billions of polygons being rendered in near real time, which means you had incredible volume of workload that had to be done in parallel. So with that all in mind, GPUs have become more and more powerful as graphics have become more rich, whether it's in movies or video games or other kinds of entertainment. Graphics have become much more fluid and much more high resolution, much more realistic. Well, that also means there's a lot more complex math and heavy lifting happening behind the scenes. So most data centers are utilizing GPUs to take advantage of their impressive parallelized, data heavy mathematical processing power to accelerate certain complex workloads. This allows for less resources like space and power to be utilized to accomplish the same tasks. And we can see on screen that GPUs are growing in data centers, particularly these specialized AI centric GPU circuitry. And this is because a lot more cloud driven presence is for taking technology and automating workloads and also doing massive amounts of data processing in as quick of a time frame with as accurate results as possible. And often is the case that something that might resemble AI is involved with that process.
Awesome. Um, Thank you for that. I mean, it was very helpful and something that I actually understand, surprisingly. um, Great. So, and now this brings me to my most pressing question. I mean, I know you've spoken a little bit about this with me about, and you just explained, the heavy lifting done by the GPUs. And I also remember you discussing on your Twitter about how these chip makers are going to be affected by the reduction in crypto mining. So, would you explain how these companies kind of fit into the crypto space? And also, if you could talk a little bit about the recent changes to Ethereum. I remember you saying something about that as well, that there's something changing over there, and which is why there will be a change in the demand cycle. So, yeah, if you could elaborate where GPUs and CPUs fit into the crypto space.
Absolutely, sure. And it's a really interesting question. It's one that probably doesn't get discussed enough by investors in the space because, quite frankly, some of the companies here haven't been entirely forthcoming about just how important crypto is. So, on this one slide, we've got a SEC charge against Nvidia for inadequate disclosures about the impact of crypto mining on their revenues. Crypto mining sales were actually a very substantial revenue contributor, the likes of which we probably can't quantify because we don't know. What I do know as a gamer and a technologist and someone who's watching this stuff through the eyes of other people that are involved with various parts of the crypto ecosystem, including mining, is that card supply became so tight that a whole black market rose in order to try to fulfill those demands and also for people to scalp and be able to mark up these cards 3 to 4 times retail when they were still bought even at those crazy prices. Now, that means that for the companies that don't know what these cards are being used for, they ostensibly would maybe assume it's for gaming sales, even though I'm sure they have some sense, as Nvidia did, that a good chunk was coming online because of crypto. This created some bad incentives to project growth that was unrealistic because it was based off the very volatile demand cycle of something as speculative as crypto. So crypto mining is very mathematically heavy. GPUs work really, really well for encryption. The whole blockchain is driven by this encryption. And so it used to be way back in the day, and I'm talking like, oh boy, like 8, 9, 10 years ago, crypto mining was done a lot on CPUs, but that was because the difficulty level was very low. And so it wasn't really something where we would devote an enormous amount of resources. You could throw a CPU at it, you could make a little bit of change. Maybe it was just a hair above your power bill, so you're basically arbitraging CPU power bill versus mining income and hoping to make a little bit over, right? But over time, cryptography became more difficult in the blockchain because the value of things like Bitcoin went up. And for the way those coins are designed, as their value goes up, their difficulty goes up. And so it became necessary to use GPUs for these operations because they're much, much more robust in cryptography, in processing these mathematically intensive parallel workloads. So crypto miners became the biggest users of power and computing power. So electrical power and raw computing power when it comes to GPUs. The amount of demand was extraordinary. It got so bad that if you were a gamer, you quite literally couldn't afford to buy a new card, if you could even find one. And the vast majority of GPU growth during crypto's rise is more than likely attributable to the increasing demand for GPUs for these mining rigs, whether they are customized mining rigs or mining rigs that are built just by retrofitting a whole host of graphics cards in a computer and stacking those computers on racks and stacking the racks one by one by one. So you can essentially envision a giant data center full of these systems. The result of this was, you basically had cards that were so hard to obtain that you got into a situation where most people became very frustrated, kind of turned their backs and extended their refresh cycle. Crypto was soaking up all the cards in the ecosystem. You had black markets, you had gray markets, you had intermediaries that were scalping these things on Amazon, eBay, and elsewhere for a large markup. And I can tell you from personal experience that these mining operations were also trying to resell their cards. Every time they did an upgrade, you'd see some shady intermediary reselling these quote used video cards from well taken care of gaming rigs, which are clearly used in mining operations. You could tell by some of the ways the wear and tear was on the cards. They're on 24 hours a day and so on and so forth. But ultimately, now we've seen the opposite of this. So, crypto has gone from being the biggest source of demand to now the biggest contributor to the slowdown in graphics cards. But while crypto was really, really hot, there was really no place to go where you could get these. And it's incredible to think about it. Each of these graphics cards use 100 to 300 watts of power. Crypto still uses about as much power as several somewhat small countries put together, mostly due to Bitcoin, which is the dominant, quote, currency, unquote. I can't really, with a serious face on, call it a currency because I don't think it qualifies, but it's at least something that people like to euphemistically refer to as such. And so during this period of time, during the crypto surge, AMD, Nvidia, they had no problem moving inventory. In fact, they were able to basically say, we are in parabolic growth mode. And investors gobbled this right up. These stocks went up a whole lot. I mean, I think AMD was once $2.50 a share, and what did it trade over $100, and Nvidia over $300, and it similarly was down to as low as $12 a share at its all-time lows at the last cycle. So these are stocks that significantly rose. Now, with Ethereum, we did see that they changed from this sort of construct of proof of work to proof of stake, which reduces power by 99.99%. It also similarly reduces the requirement for GPUs. So the biggest destructive force here outside of the crypto winter, outside of the 20% destruction in demand for PCs, outside of gamers slowing down their refresh rate, is actually Ethereum significantly. They're the second biggest cryptocurrency, reducing the requirement for mining. A lot of Ethereum mining companies were caught a little bit flat-footed when that announcement came out that they were going to proof of work or proof of stake from proof of work. And a lot of these companies did very poorly as a result. And that also released a lot of excess GPUs, used and otherwise, into the market. So you have the demand cycle has been thoroughly compressed because now we've gone into this slowdown in the economy, slowdown in crypto. Ethereum's changed how they're doing their blockchain and how they're proving people's participation in the ecosystem. And then on the other side of it, you have companies that were kind of ready to produce graphics cards for the entire world. And so they really throttled up production. They have all of their distributors stuck with an enormous amount of inventory. And now they're moving on to their next line of graphics cards, as is the case with Nvidia. They were on their 3000 series. They're moving to their 4000 series. And so there's going to be this glut of older cards that are going to have a significant markdown. And these are low margin sales. A lot of their vendors don't make enough margin to really mark them down meaningfully, but in order to move them, they're probably going to have to. So I think there's a lot of things going on because of the crypto meltdown that really put a strain, particularly on Nvidia, because they have 75% of the market share in graphics processors. So this is a company that, even though they have some of their risk outsourced in the sense that their inventory glut is happening at their OEMs, there's still a lot of potential for this to have knock-on consequences for the company's top and bottom line, but also for how many vendors are going to actually, or OEMs are going to contribute to their ecosystem after we saw EVGA, which again was a huge presence in North America. I think about 90% or 80% of sales. When they're dropping out, that sends a pretty striking message. So ultimately, I'd say that the net here is crypto had a much bigger impact on GPU demand and driving it than many people were looking for in the financial world. Companies, including Nvidia, as we can see on screen, were not particularly forthcoming about just how big of an impact that has had. And I don't think that they even fully recognize it themselves because, quite frankly, they're in a situation where they don't have a way to tell which customer bought a video card for crypto and which customer bought a video card for gaming or a computer or a medical lab or whatever they might be buying the card for. They don't know. They just sell them and they kind of extrapolate based on who's buying what model as to what it might be used for. So ultimately, crypto distorted the dynamics of the GPU market such that there is probably a significant amount of slack and slowdown to come.
So you spoke a little bit about the crypto winter, but so why are we experiencing a crypto winter?
That's a great question. And I think it goes back to the dynamics of what crypto is and what crypto is not. And I know there's a lot of theories on this, and my theories are probably not well received by the crypto community. And I'm okay with that. The crypto to me is a relief valve for excess speculative liquidity. And during the last 13 years or 13 plus years, I should say, really 13 and a half years, there's been this ample surplus of liquidity in the global financial system until really this year. And that liquidity was furnished by central banks around the world, responding from one financial crisis to the next, trying to avert a sort of, disorderly meltdown, shall we say. Whether it was the great financial crisis, the European crisis that emerged in 2011, 2012, or whether it was the tightening tantrum that we saw in 2018 or the COVID crash. Every time central banks have kind of responded by opening the spigot of greater and greater liquidity. And as that liquidity floods the global financial system, it looks for homes. And if there's an ample surplus of it with a high enough velocity, it will go to ever increasingly risky elements to speculate in, particularly if real interest rates are negative and people are looking for places that are longer duration risk to speculate. So crypto to me was this sort of relief valve for all this excess liquidity. Whether it was designed as such or not is unknown, but it certainly served that purpose. And so the other side of that coin is now we don't have this ample surplus of speculative liquidity. In fact, quite the opposite. Central banks are tightening at the fastest point probably in history, especially if November comes in with a 75 bip hike, which is priced in with something like 81% certainty now. You're seeing liquidity being pulled out by various central banks. You can see a chart I put earlier on a Traderade article talking about this as well, where the balance sheets of the Bank of Japan, the Bank of England, the Bank of the People's Bank of China, the European Central Bank, and the Fed are all going in the direction of contraction. So we went from an era of ample liquidity, of maximum appetite for speculation. You couldn't go wrong in Bitcoin. It had gone from 0 to 65,000. So it's obviously going to go to a million. Now we're in an environment where the opposite is true. And by the way, I think Art just put out a price target of about a million for Bitcoin. So we could talk about that at some point. But, we're kind of in the antithesis of everything that made crypto as exciting and as appetizing as it was. Now we're in a risk-off situation of tightening global financial systems, liquidity that's not only limited and constrained, but is being drawn out ever more by the day, and a rising cost of capital. All this is the antithesis of what crypto wants to succeed. It's also pretty bad for things like growth stocks and biotech and other long duration risk. Quite frankly, what we're seeing is people are starting to look at what it is they hold because it's costing more to hold it, particularly with leverage.
So basically, what you're trying to tell us is we're literally seeing the other side of the coin.
Yes, we've gone from, what is a panacea for crypto to the absolute opposite of that. And unfortunately, it's probably only in its early stages if the Fed is serious about tightening to the scale that they have, particularly with the runoff of their balance sheet of about 1.1 trillion a year.
Okay, so that makes a lot of sense now. Um, Great. So now that we know a great deal more about the three companies, what they do, how they fit in, how they fit into the cloud, how they fit into crypto. So let me ask you, how are each of these companies different?
Sure, Absolutely. That's a great question. We're going to go back to the CPU, GPU slides, and some of the content I want to share on the verbal side relates to this. So, Nvidia is the leader in GPUs. And if you go back in time in the Mayhem Wayback Machine, you go back to the 90s and there were so many options for video cards. I mean, as a gamer, you could go to the store and there was like 10 different companies, and you had Matrox, you had Voodoo, you had Nvidia, you had ATI. I can't even remember them all, but they either failed or were consolidated. And so now you really have two options, maybe three soon with Intel's Arc offering, but the biggest two were Nvidia and AMD for your graphics processors. And AMD and Intel are similar in the sense that they make CPUs as their mainstay. So that's kind of the bread and butter of a computer. Every computer has a CPU. Not every computer has a GPU unless it has sort of specialized graphics needs. So AMD and Intel's processor products are integral. They're very, very important. You can't really have a world without CPUs. GPUs, some components of them are pretty, the components of demand driving are kind of discretionary. If you're talking about gaming, we don't need the game. It's nice. It's fun. We don't need to do it. And therefore, that is a discretionary expense you could defer indefinitely. Similarly, crypto is, for the reasons we just talked about, entirely discretionary. It is very casino-like, very speculative. Therefore, how it exists and, quite frankly, whether it exists are things we can't necessarily answer with any certainty. But what we can say is in an environment like this, it's probably going to be in trouble. And therefore, the demand for graphics cards, if crypto prices are going down and difficulty is going down, and Ethereum and possibly other crypto are going to this proof of stake framework, then the requirement for all this computing goes down as well. So that puts NVIDIA in a more precarious position than an AMD or an Intel. But let's talk about AMD versus Intel, because I think really, if we take NVIDIA out of the equation for just a second, and there are reasons to do that, the company is projecting that they're probably going to see their growth slow. This is from their most recent earnings presentation. They're looking at the second half of next year, just showing a slower growth rate than I think what would be ideal for the company. To me, this is actually a very optimistic projection, and I think it's the company significantly discounting just how important crypto is. But, suffice it to say, here we are. We're seeing the crypto winter. We're seeing gamers kind of bail out from building their rigs and refreshing them as rapidly. We'll test the water with NVIDIA's new 4000 series card and see how serious people are. But I want to talk about AMD versus Intel. I'm going to put a chart on screen here. This is AMD versus Intel versus NVIDIA on the graphics side. What's interesting about this is if you look at all graphics, not just discrete, but integrated and discrete, Intel is the leader there, but they're actually losing market share there too. And that has to do with more and more computers are shipping with discrete graphics processors because people are streaming video and it's 4K or it's 1080p, or they're playing video games, or they're, rendering things in 3D in one way or another, or needing that acceleration. So more and more computing needs 3D acceleration, which drives demand for AMD and Nvidia as well as Intel's Arc offering. But let's take a look at something else. And this really tells the story. AMD is, in no uncertain terms, beginning to eat Intel's desktop CPU market share lunch, as it were. As we can see, AMD is continuing to bolster their market share over the last 7 years and is actually reaching a point where they may eclipse Intel in desktop market share, which would be enormous. And I can tell you, as an AMD CPU user myself, that their CPUs are superior, both from a performance and security perspective. We also see that AMD is growing market share in just about every processor segment: mobile, desktop, server, client, and overall x86 processing. So let's just zoom out for a second here, because why is AMD so readily able to eat Intel's lunch? Well, part of it is superior engineering, whether it's Taiwan Semi's contribution, or another detail that I think is important to remember as well. When 64-bit processing was becoming a big, big effort for Intel and AMD at the desktop and later laptop level, they both competed on creating an instruction set for their processors. Intel and their Itanium instruction set and other variants ultimately lost because, let's face it, they were terrible. And this is a company that designed some of the first microprocessors that gobbled up um, components of other CPU companies and still really wasn't able to crack it. So, believe it or not, every Intel processor and every AMD processor that are x86 or focused really on consumers and servers, PCs, laptops, things like that, these processors are largely AMD 64 instruction set, which means AMD wrote the code that runs on every Intel CPU that is in your computer, your laptop, or the server that's serving you content on the cloud. So AMD, you could say, had an edge, and they've been leaning into that edge because they also have a superior foundry with Taiwan Semiconductor, which allows them to make better CPUs than Intel now. And that's my opinion. I mean, Intel does have some great tech, but I think AMD is actually a superior offering. Intel is introducing their own graphics processor, though. It's going to be called the ARC or ARC, not to be confused with the ETF that's destined towards zero, apparently. And that ARC graphics card is promising to be pretty power and cost efficient, but it's also only really competing with a lower end Nvidia graphics card. And so what the premier ARC offering is competing with Nvidia's middle of the road 3060 video card. And so what that's telling you is that Intel is not making a very convincing entrance to the GPU market. They're kind of shrugging their shoulders and saying, hey, here's something that's as good as last year's technology at a reasonably fair price. We hope you like it. But in the graphics acceleration market, um, it's really, really important that these companies set the tone because gamers are demanding. Oftentimes, they're updating their computer because they want to play the latest games. And so Nvidia has a really convincing offering with their 4000 series. You know, AMD has a great offering, and Intel's offering is just kind of come in on the middle of the road, maybe for the sort of, you know, price sensitive gamer, the gamer that's not really concerned about playing the latest games, which is not a very large part of that population. So I would say AMD is really in a very interesting position because they're gobbling market share from Nvidia, they're gobbling market share from Intel, and they seem set to continue to do that. Meanwhile, Nvidia's got this glut of GPUs, and they've got these sort of pretty significant headwinds they've got to deal with from crypto, from gaming, from the slowdown in the PC market. And Intel just announced they're going to fire something like 20% of their workforce, including a lot of their sales and marketing people. And that calls into question just sort of how well things are going over at the company. But in my mind, it also tells me that they're not very confident about their ARC offering or about their next line of CPUs. These aren't just macro headwinds that Intel is facing. It's also really over a decade, maybe 2 decades of mismanagement of the company. And there's engineering reasons for that too. They literally did cheat on some of their benchmarks. And that's one of the reasons they had some of the glaring security vulnerabilities in their processors, because some of the checks that should be done on memory were not. And that's why the meltdown vulnerability and some of these others were possible. That doesn't mean AMD is guilty of sin, but Intel definitely did some of the worst things to jump ahead in benchmarks, which made their processors seem faster than really they should be if proper security and diligence was done in their engineering and in their design.
Right. And so now we come to our final question, and the one that's probably been on everyone's mind. Although I think we can guess a little bit what your answer is going to be, but we want to hear it anyway. So, after everything we've heard and everything that you know, which one would be your pick among these three?
Yeah, absolutely. I think I probably gave my hand away a little bit there, but I do like of the three AMD. I think with the guidance they gave recently and that sort of discounting that we saw, it brought us back to, I want to say the COVID crash levels or somewhere quite close to that. But on top of that, I feel like AMD has a durable competitive advantage. They have superior offerings. They're able to offer them at competitive costs. They've built a very, very well reputed brand. They're operating in both key spaces and they're operating really well, as evidenced by their growing market share that they're ceding from their competitors in CPUs versus Intel and GPUs versus Nvidia. So I like AMD here. I think that they're the most exciting because my mind tells me, based on what I've experienced as a gamer, as a technologist, and as someone who's been watching this and talking to a lot of folks in different industries, AMD's got a chance to eat more of Intel's market share more of Nvidia's market share, and really build their business to be much, much larger than it is today in the CPU and GPU space, and also in specialized semis and mobile processing. So I think AMD's got an outsized advantage. I'm really impressed with the company's management. I'm also really impressed with their products. I use them personally, and I mean, I've used all of these different products. I've used AMD, I've used Intel, I've used Nvidia, I've used other manufacturers when they existed in the past. And I can say AMD has gone from a company where I literally did avoid their products because they were subpar to a company where I prefer their products both on the CPU and ever more increasingly on the GPU side as well. So I believe AMD has also got an advantage in the data center space. They can erode market share from both Intel and eventually Nvidia. They've already doubled their market share to 22%. So it's worth watching closely because that space is resilient a little bit more so than desktop computing during a recessionary environment, because companies are going to continue to migrate to the cloud. The cloud is going to continue to need more hardware to accommodate ever more increasing usage. And as a result, AMD, if they're continuing to erode Intel's market share, is probably going to continue to grow in that space. It's also growing much faster in desktop computing. They actually rose 2.1% over the last quarter and 7% year over year to 28% of desktop computing market share. So, AMD is continuing to pull away from Intel at their core businesses and Nvidia at their core businesses, and doing so in a way where they're not sacrificing quality. They're not creating problems. They're not doing a short-sighted plan. In fact, I think that one of the biggest strokes of genius AMD's management ever made was when they bought ATI. They made one of the first APUs, which was a CPU that has a graphics processor built into it as well for accelerated graphics. But then they also really tried to revolutionize their video cards and their CPUs, and kind of cross-engineered with some of the technology lessons they learned from their own engineers and ATI's engineers to be more disruptive in this space. And I don't see that from Nvidia. I don't see that from Intel. I think they're both very good companies, but I would prefer to own AMD as a long-term investment if given a choice between the three.
Excellent. I think we can wrap it up here. Thank you so much. It was a very informative session. I think you've cleared up a lot of facts for us, and most importantly, I think you broke it down in a way that someone like me can as well understand. So I hope everyone found this very interesting as much as I did, and very informative. Thank you, Mayhem.
Thanks, Aisha. It was a pleasure talking with you about this, and I hope the content's useful for everyone, and I'll see you all next time.